What's up, everybody? Michael Silva here. What a brutal day in the markets. We finally cracked this trading range that we've been in, and we saw some wicked sell-side activity into the closing bell. We have CPI data coming out tomorrow, and I want to talk specifically what it is that I'm looking for as far as trading ranges go and what the expected move via the options market is pricing in going into this report. So it's going to be a short episode. We're going to focus on the main index products. Look at yesterday, we discussed what? We talked about these negative divergences that we're building, right? We had the higher highs, and then we had this potentially turning around. We had the lower highs over here on the Knights-McClellan oscillator. That did play out to the downside. It gave us a warning. It's not the holy grail, but it gave us some indication that, hey, the movement to the upside is potentially taking a little bit of a back seat. Another indicator that we discussed was this trend indicator. If you follow me on Twitter, you saw me post this. If you don't follow me on Twitter, there's a link in the description. But we did get a new low here on the trend reading that we haven't seen since April, right here on this date. And you can see when it triggered, we did see some sell-side activity. That doesn't happen all the time, but it gave us some sort of a heads up that something could be taking place right now, right? So the 11 sectors that make up the S&P 500, they all finished down in the red. Communication, services, and technology, financials took the biggest hit. But even defensive sectors like utilities was down there towards the bottom. Consumer staples did lead the way. This is important to note because as we are in a bear market, if we're going to see further downside, where can we potentially look for buying dips or see strength here potentially soon? And in my opinion, if you look at the year-to-date performance, you want to look at the top performing sectors year to date. And we have energy, we have utilities and consumer staples. So if the VIX gets above, 26, 27, 28, even, up into the 30s, everything could get hit. Okay. But as it stands right now, utilities is pulling back from being positive on the year, and it still is. And then energy was also down. I believe, what was that down? Energy was down 2.2%. So it's coming down from overall bullish trend. Okay, so there could be some more downside, but we need to start thinking in terms of, hey, where can I apply some risk if necessary. Now let's hop into the S&P 500 expected move. This is the SPY. We came down to the lower expected move, almost there, touched it. The expected move is just right there above 400, so we're within reaching distance. A big note here on this breakdown is, guess what? We broke out of this trading range on contracting volume, and guess what? We broke down with increasing volume. We're going to see more volume than this come tomorrow, most likely, given that it's a big econ drop day, but we'll see. Now I want to talk about now, what do I expect to potentially see as far as the expected moves just priced in for this data drop, and here it is right here. So we broke down from this, okay, and we closed at 401.44. The expected move going into tomorrow, based on the CPI data, based on the implied volatility of the options market, it's pricing in about a $6 move. That is plus or minus $6. That doesn't mean it has to stay there, but I mapped out a couple key levels to keep an eye on. So first and foremost, 400, right? That is the lower weekly expected move. And as we know, 68% of the time, we finish within the weekly expected move. So my thought is, if we do get outside further, start looking at this area over here, because that could very well produce itself a bounce from those lower levels. And that lower level is an expected move lower range for going into tomorrow's report, which is about 395. And I drew it up to around 397.50 because, as you can see here, there was actually prior areas of resistance, and you can see we blew through that level. So there could be some demand in this zone here if price were to really stretch down that way when the report drops. Now, if the report, remember this, like the report, it could surprise the market. As it stands right now, it looks like the market was basically telling us today that, hey, expect a bad report and things could get worse based off of this price action. All right, so it could surprise us, and we can just start ripping to the upside. Where can the upside be? Well, first and foremost, RSI is getting a little bit frothy here to the downside, right? So I always like to say, hey, if you're looking for a bottom, at least look for some sort of positive divergence to form, and it could take some time to do that. We're trading below the 5-day moving average. If we start ripping up, the upper expected move for just the CPI report is 407. 50, and guess where that coincides with? It coincides with this breakdown. So as this held as support, we haven't had a successful back test to say that it can hold as resistance. Once support is broken, it can become a level of interest. It is a level of interest, and it could become a level of resistance. So if price were to just surprise us to the upside, keep a close eye on this level over here, and then we might see some potential downside. That's if it comes, surprises us up, right? And then potentially starts selling off. So those are these zones right here, right? That I'm going to be paying attention to tomorrow. My expectation is a lower high and a lower low. Okay, so if I were to draw that out, 407.50 and 395. So 407.50 is right at right here. 407.50. Okay, 407.50, lower high, right? So lower high, and then as far as the low portion of this box, it's 395. So we'd go back and we'd say 395. That's right around. That's pretty darn low, right? So it may come down there, it may not. But if I were to draw that in a box, 407 to 395, I'd be looking for a trading range that looks something like that tomorrow. Now that's just a forecast. Okay, so these aren't by any means what's going to happen. You can't predict, but you can create trading ideas based off of this type of information. So that's what I'm looking for tomorrow come the CPI report, okay? Now keep in mind the VIX, it did fire off as we discussed. That could be a possibility as we had that positive divergence. Well, it played out to the upside. Now the RSI is getting a little frothy here too. Keep in mind it could get very frothy, okay? But just be mindful that it is reaching up to that area. Same with the SPY on the 15-minute time frame. We're getting a little extended. Okay, take a look at the Qs. Qs also broke down. However, down. It was actually down quite significantly, 2.68%, and it came to what? Fill just about that gap right there, and we're still off of that lower risk range. Okay, so this could be the start of the market telling us something that, hey, we are already in a downtrend, right? Boom, 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 and we saw bear market rallies, bear market rallies, bear market rallies, and this could be just one of those extras, moves right back down to the downside to potentially test the low. So the trend is going to continue. This could be an early indication of that, all right? And an early indication could say, okay, we consolidated here, but then we broke down on what? More volume, and that's what we've been saying to be very careful for. The MACD is curling back over. We broke down on big volume, and this is curling over as well. The lower expected move is about 295, so we're not too far off of that. What do I expect going into tomorrow? I also expect a lower high and a lower low. Doesn't mean that that's going to be the case, right? RSI is getting a little extended to the downside. So if we start moving to the upside, what is the options market pricing in for a CPI expected move? Just above 305, basically about 306 is the upper level, and that coincides with prior areas of support. Once support is broken, it can become a level of resistance. Now, the lower end of that is about just above 292.50. Okay, so 293. And where does that line up with? Prior areas of resistance. So this, to me, makes a lot of sense going into tomorrow. If we come down here, we might see a bounce. If we go up here, we might get rejected. Okay, so those are some key things that I will be paying attention to. Now, keep in mind, volatility. It is still in the 30s, right? So this is NASDAQ volatility. It closed at 32.73, all right? So this is where things can get really funky. So be very, very careful here at these high volatility levels. Now, if we look at the IWM also finished at about the low of the day, down 2%. Big down day. Volume was quite minuscule relative to the last three trading days, so not much going on there. If we do take a look at the 15-minute time frame, right, I want to show the expected moves. The lower expected move for the CPI report lines up just under the weekly expected move. Okay, so that to me, that makes sense for maybe a tag down there. That also lines up with this prior little area of support. That also was a prior area of resistance here. So yeah, if we get some further downside, this could be an area where it kind of stalls out for the day. We will see. We also have a gap beneath us that can act as a level of support potentially, okay? Now, we've been talking about this being a volume, kind of like a gap right here in the volume, and there's a volume shelf profile down here. I'm still short the IWM, okay? So for those that, I told my Discord today, I took off 1/3 on this move to the downside. So I took off some of my position. I still have a stop just above 192, okay? So if I actually, if it goes straight up and it stops me out, it's now a small loss at this point. Okay, so that's just how I'm mitigating risk, and I do plan on actually lowering that here come after tomorrow. I just want to see the price action. If we get a pretty big gap down into this area, right, if we head down here, I'm going to be reducing the exposure once again. Okay, I'm going to be reducing another third. Why? Well, because this could act as an area of support, and like I said, you know, if this is a bottom and this is just putting in a higher low, I mean, there could be a lot of upside, and I just don't want to get squeezed out of these positions. Now, on a bearish note, we're back below that 5-day moving average. We continued there now for 2 days, so this is going to start to wind itself down and flatten out to curl over. If we start moving to the upside, right at about 187, that is where not only the upper expected move is, but that's also where that 5-day moving average is. So those are the zones that I'm watching heading into tomorrow's report. A key note also is volatility of the RVX. Russell volatility is now back above 30. It closed at 31.28. So we pulled down and then we quickly recovered from this, forming somewhat of a hammer candle. Still got, you know, one more trading day left in the week. So be mindful here, right? These trends, they are bearish on the daily timeframes. The SPY, the Qs, the IWM, we have lower highs, and this could be the early stage process that we're going to be coming back down to retest these lows, or it could retest the lows, maybe break even lower and continue this trend down. We don't know yet, right? So we got to only just take with what data we have right now and forecast from that point. I would love to see some sort of bottoming process take place, and then all of a sudden we rip back higher, because that's where all of my exposure goes. All my exposure goes to my long positions. And on this move up, we've been saying what? I've been saying that I've been reducing exposure. I don't know if I actually said that on the videos or my Discord. Been reducing exposure on my long positions, and I started building up a short position in here. And the constant frustration of sideways and chop up higher sucked, but I closed up a third of my HYG short, and I closed up some of my IWM short. So those are now printing. Now I'm ready to start looking for some long positions. I would like to see a stronger hit to the downside, maybe even an undercut to potentially maybe take out some stops down here and then start to look for some more long positions. If you want some trade ideas, you can always hit the link in the pinned comment or in the description. It's a link tree thing, and you can hit my trade ideas. And I also have a Substack. I just started it. That's where I'm going to do my newsletter, right? I've been talking about this newsletter that I'm starting. I'm going to do it through Substack, and then I'll also try to create that free Discord here in the very near future. So keep your eye out on that. That's all I got for you on today's episode. Be on the lookout tomorrow for a weekly recap. See you later.